Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
Here we go. March. Bulls versus Bears with the man Chad, who's about to piss all over my parade. I got a feeling this month, but I'm gonna try and keep it positive. I'm gonna try and keep our, as poor scrap guys, try and keep our head above water. But this could be a rough one. I've got a feeling, and that's why Chad's got that Cheshire cat smirk on his face, about to lay the wood on us. But we're gonna put up a fight. So what's going on, Chad?
Brett, I'm just smiling ear to ear. I got 22 bear points and only one bull points. This is gonna be a great.
I saw that post on LinkedIn. I was like, "Fuck, one! You got one, like, one bull point. That's it." Like, I feel like you didn't try as hard as you could. I feel like there's a couple bull points in there. We'll talk about it. So let's do this thing. Let's go.
All right. Well, let's just jump right into it. So I think we gotta start out macroly, right, as we always do. But to me, it feels like, or I guess what I'm hearing is some parts of Europe and China are really facing a recession, and part of that being China is iron. You can see that in the iron ore pricing. We've seen iron ore fall from $135 a ton down to a little under 125, and that's to me, this is a great indication of what's going on in China and steel demand.
Fair. It does feel like they are still trying to figure out. I mean, their stock market's been getting crushed, right? They're still trying to figure out kind of what stimulus packages they can put together that are actually going to stimulate something, right? I mean, I feel like they're swinging the bat and not lots landing with any of it. But they feel like their stock gets pumped, their market gets pumped for a day, and then the next day it dumps, right? And so I mean, it's the good old China GDP pump, right, of just building and construction and consume as much steel and aluminum and as you possibly can. And I mean, I don't know if that deal is really working or is attempting to work out right now.
I think the whole real estate market. I think we've had a post back and forth on LinkedIn. I had some data about the real estate market in China, and you say, "Hey, stimulation's coming."
Yeah, it's coming. It's like the check's in the mail. The check's in the mail. It's coming. Like, don't worry. Yeah, you're gonna get paid. I swear.
What do you know? The scrap guy is saying the check's in the mail.
That's like one of the 12 scrap commandments. If you've ever seen that, one of them is the check's in the mail. The load didn't look like that when it left. Like, there's a few of them.
Yeah, I love it. Well, with cheap iron ore, you know what that means, Brett? That means pig iron must go down, right? Cheaper inputs. We've seen pig iron fall from $475 down to $460, and I have a feeling it's going to go lower. What do you think? Now, this is a big component on the prime market, which feels like it has a ton of pressure.
It feels like I feel like you're probably in the right on that one, which is going to put pressure on busheling, right? It's going to put pressure on prime. So if you're, in the prime market, if that's your market, I feel like might feel some pain in come March. But we'll let you tell that story, because I feel that I don't want to be the bearer of bad news here. I'm the bull here.
Well, China's demand wouldn't be the only thing that could take the pig iron and scrap market down. It would have to be our local demand in the United States. And this chart is, look at this black line. You see lead times just not very long ago, December. Yeah. They were 8-9 weeks. Today, 3 to 5, 3 weeks.
Which is, I mean, we're dropping down to that 3 week, even slightly lower, right? Lead time, which we haven't seen in a little bit, I think that whole, coming out of, the year destocking, but maybe it depends on what March and April bring, from a consumption standpoint. I still hear a lot of people talking about, the feds and some of the money actually coming to roost for some of these, larger infrastructure projects. Depending on how far those are along and what those look like as far as from a lead time standpoint to get them approved and whatever else. I mean, we could see some steel demand. The automotive sector does feel like it's still, lagging like that. Interest rates, I think, have a pretty big bearing on that as well. So, I mean, you're not going to get the automotive demand that maybe you would like to see. So, yeah, it's going to be a tough go, which if you got some negotiation, if you're actually on the new steel buying side. I know some people listen to this podcast that are actually trying to figure out their new steel buyers or their combo, right? So you've got some wiggle room negotiating price if the lead times come off like they have.
Yeah, for sure. And I think we haven't seen 3-week lead times, and I don't think, what does it look like, September of last year? So it's been a while, and I think that puts the buyers back in the driver's seat for sure.
Yep.
All right, so with lead times diminishing, you got to think, well, what is pricing doing? And so we've seen pricing close to $1,100 on hot roll at the beginning of the year. Today we're somewhere around sub 800. So that's where you think about it. Let's just say it's a $300 conversion cost.
I'm gonna take a picture of this. Yeah, so I do buy some I'm about to use this at least. I'm gonna try and get some advantage out of this program. All right. Go ahead.
So you think about that. You got to ask yourself, okay, if steel mills are selling hot roll at $800, and we already know automotive demand's down, we already know blast furnaces are going to want to chase those sales, right? Then, all right, if it's to cost $300 to convert a ton of scrap to steel, you got to say at least now you're sub 500, right?
Mm-hmm.
And so, and steel mills don't want to be doing these things for free, Brett.
The
steel guys,
you guys
cannot work for free.
You can't make $1,000 a ton. You guys aren't interested in working, Like, we can't make 600 ton. We just can't turn the lights on.
Yeah, so that's where I feel like, it's not going to be good over the next 60 days. But time will tell.
Yeah, I think it will. This thing can turn in a hurry, right? But like I've said in the past, I mean, what this year really reminds me of the 15-16, right? It really reminds me of really 2016 election year. 15 was kind of rough, the end of 15, and then 16 was just, man, it was just death by 1,000 cuts. And this could be one of those years where it's just cut, 5-10 here. Like it really has the ability to play that self out. So maybe you don't get a big dramatic drop per se, but what you might have a tough time finding is maybe some better markets or more markets or even available markets for your material. So it might be just a game of, the price is the price if you've got a good home for your material.
Yeah. Yeah, it feels like for sure that's going to be one of those months where liquidity is key. And to provide even more bearish news on this, hot roll futures are lower too for April at 788. So it doesn't feel like speculators are thinking things are going to get back better. There are being some bets had for June and July, but overall it feels like the next 60 days are going to be no bueno.
Which June and July are traditionally, like we talk about, your summer months where it heats up and the flow slows down. So that could just be maybe people feel like we're going to run into some flow issues if we keep getting price cuts. Traditionally you get a little bit better scrap flow March and April, at least over here. Now, I haven't really seen the ramp up, I mean, the snow's melted, we've got a little bit more scrap, but it's not like anybody around.
Whoa. We can't just roll past that. You said, how is your scrap flow?
Our scrap flow is, not great. It's terrible. We need more scrap, and that's what's going to really hamper. But it still goes back down to demand. I mean, maybe your scrap's not flowing, but if the demand lacks, then it's the double-edged sword. Now you got a lot of people fighting over a little bit of scrap, which means you got margin compression on the front end and, sales price compression on the back end, and it makes for a tough go.
Well, I believe everything you said there, except about scrap flows, because on LinkedIn we've seen Adam Weitzman got out 113 trucks just to one mill in one day. I feel like
The
flow's
day
gonna be bad.
before the market fucking closed on a down month because that contract was about to close, right? Like
Yeah,
everybody
flow is
knows how the
great. Flow is
scrap
great.
business works. And that's one thing you got to appreciate about owning your own fleet of trucks, right? Now, the details of that, how that worked, whether like all 113 loads were delivered um by Upstate's their own trucks or not, but I've seen pictures of his fleet. And when people ask me how important is it to invest in the transportation side of your business, right? I'm like, dude, you have to invest in it because there's no way that you can move that type of volume where it needs to go in a day or right? Like if you don't have the ability to control your transportation, I mean, no outside brokerage is going to get you that many trucks. Like nobody can come up with 100 and whatever end dumps. Like not in a, like so
Yeah.
it's going to be probably a mix. So Adam, in my opinion, and Upstate are kind of a poster child of why owning, a good portion of your transportation is so vital to your business because then you get markets like this where the market's trending down. You have XYZ amount of tons under contract to the steel mill, and most people know this, right? Like whether it's 100,000 ton or 10,000 ton or whatever that is. And the mill doesn't give a shit if you leave 5,000 ton on the board, right? Because you didn't get it delivered. That contract's getting canceled. Like, sorry, bud, renegotiate. So that's when you're like, nope, I got these trucks. Like, we're going. Like, that shit's going to get delivered. And, kudos to him for getting that deal done. And that doesn't necessarily like don't go get it twisted here. Like don't tell me that means the scrap flows up. That could have been like we could have been down for maintenance. We finally got some shit going, and now we got to get it pounded through the system because we got to fulfill the contract. That doesn't mean scrap flows up. Go piss on my leg and tell me it's right.
Hey, bro, it's your story. You tell it how you want.
You're damn right. You tell yours, I'll tell mine, and we'll let the listeners figure out who's right and who's wrong.
All right, let's keep going with the bear point. So I just want
Okay.
to circle back
Yeah,
around
let's circle back to some more bear points. Yeah.
and just repeat.
Yeah.
Shanghai steel rebar, it's down 38.60 to 37.66. Just want to make sure everybody knows
Yeah. Which is
things are weak in
a
Asia.
little which is a minute like little bump in
Yeah.
the system.
All right, so here's my greatest point. I got two more points. I left
Mhm.
the one bull point for the last.
Yeah.
But
All right.
let's talk about 80/20 turkey heavy melt. It's down $32, Brett, from 422 to 390. That's not good.
No. No, that's not great on the East Coast for sure. That's not what you're looking for. That's not going to help you negotiate with the domestic steel mills if you're over there and that's your primary export market. How big of a player is Turkey going to be moving forward for the US market? I mean, considering the currency devaluation, is Turkey still, I mean, because I'm asking this because I don't know the answer, right? Like I'm not trying to set you up. How big of a player is Turkey in the negotiation of ferrous scrap off the Midwest and East Coast?
Yeah, so these are I mean, they change all the time. They could be wickedly off, but my guess is we trade around 4.5 to 5 million tons of scrap in the United States every month. About 1.5 million tons are going to go export, both East Coast, West Coast, container, vessel, all that.
Okay.
Of that, what is going to actual Turkey? Um, that could be as high as 700,000 to 800,000 tons, right? It could be low as 200,000 to 300,000 tons. So that kind of gives you a parameter
Mm-hmm.
of what's kind of, but it's a huge effect no matter how you look at it because it's such a leading indicator. And then
So
when you mix
anywhere from
that,
like 10 to 15% of the ferrous scrap traded across the country is what you're saying?
yeah, and I think that
Maybe 10%?
yeah, but more importantly, it's like how, and I've debated this with other folks, how much business is being done on a formula percentage wise versus an actual, like, here's my price.
Yeah.
Right. Like, and so it just feels like there's a lot less business being done independently today. Like a true trade. A lot of
Yeah.
it's like, well, the formula did this, so we got to do this. Right. And so I think to have a turkey as a leading indicator, it might be a small percentage of actual tons being transacted, but the impact is it's quite large.
The
Right?
numbers weighed into a lot of the people's formula pricing,
Yeah,
right? Is what
yeah,
you're saying, like on the East Coast. And if you're doing good volume with a XYZ manufacturer or whatever demo, you probably depends on how you set your formula up. You probably weave in that one HMS 1 and 2 turkey price, probably with some sort of domestic mill pricing and when whatever the discount is, and work it from there.
yeah. If you're a major steel mill and let's assume your heavy melt price was competitive with export last month. You're not walking in this month saying, "Oh, I'm only going to go down 20." You're starting at 32, right? Because
Yeah.
that's the export markets could go down even more than that.
So how about the what other export markets are worth paying attention to if you're on trade? Obviously, they're on the West Coast. It's the Asian markets,
Yeah.
but
Yeah.
what
So,
other markets are? I mean, obviously what would you pay attention to as a trader on the West Coast?
well, if you hear any other like vessel consumers outside of Turkey, the market's not good. So,
Yeah, there you go. Well, that's like a good insight, right? Like that's why we
yeah.
do it. Is if you're hearing people trading with other people, that means they're trying to find homes for stuff, right?
Yeah, yeah, yeah.
Yeah.
Yeah, all right. So let's wrap this up on some positive news.
Yes. Yes. Let's end it on some highlights.
You're the non-ferrous guru. What's going on with nickel? It's up from like $15,800 all the way. Now it's like 17,300. What happened?
I feel it's trade driven. I feel like it's, traders moving the market. I mean, I think nickel is easily moved with, some big block traders. And that's why I feel like that thing can be volatile. I don't necessarily think that it's bunch of demand driven, right? I mean, what's crazy? We live in this like these trades, you look at the future trades. I mean, that's only going to get like more in depth and more heavy as time goes by, right? On the ferrous side. I mean, it's not something that my father ever dealt with or anybody else never it never even played a role in the business, but yeah, I obviously that there's volumes being, hedged against that and yada yada yada, which we don't hedge, but I mean it was never a factor. So I think traders are going to continue to kind of move markets without even having the actual physical material, at their facility or in their hand.
The volatility will give you some opportunities. It's all good, right?
Yeah, I mean it's if you're a trader, you love volatility, right? You're like the more swings, the better. Like if it just stays flat, it's hard to make money.
Yep. Absolutely.
So
Well,
what's
what
your
do we
opinion?
think?
I mean, you're way smarter than me. I mean, what does
Yeah.
the smart guy think?
No, I think this is one market that I don't know a lot about, and we had the LME trading issue a couple years ago, and it just feels like how this market's being traded and how this market's being tracked. I don't know if it's a one for one in the stainless market anymore, like it typically has been in the past.
Yeah,
But
we're in agreement on that.
all right, I love it. I love it.
We found
Well,
something to
goodness
agree on.
gracious,
Yeah,
took us 20 minutes, but we got there.
we're there. We're there. Good. See, we agree.
Well, hey, it's been another great month. I really appreciate you getting on the
Absolutely,
Bulls
man.
versus
I
Bears.
love the charts. I'm looking forward to April's charts, which I feel will be a little potentially, hopefully, a little more rosier than these ones today. But the reality of it is, everybody, like, I mean, you got to know your markets. You got to know like what's going on out there, and and play the game. But know that it's going to be I feel this year is going to be a tough go. So here we go. This month's going to be, one of those ones where it's going to be a grind. Hopefully scrap flows do pick up a little bit, and hopefully we can keep a little bit of margin in it, keep the lights on. And, luckily I don't own a shredder yet. So that margin impression on the shredder side is going to be, should be a tough, so if you've got some shreddable material to sell, you might have a chance. If you've got HMS or foundry scrap, whatever, you might be a little tougher of a pickle, or some bushling this month. You might be a little tougher position, but I mean, I guess time will tell.
Well, we heard it there first. I think that's a great insight and very, very true for what's really going on in the market today.
So where's the bottom? Where's the bottom? When do we get there? When do we bottom this thing out?
Little adjective in the scrap business, right? We always overcorrect. So I think we'll overcorrect, sooner than later. Does it take 60 days? Does it take 90 days? I don't know. But there could be some major movements here as soon as this month. And if that continues in the next month, it's not going to take long before we overcorrect, in my opinion.
Which then that's when you start getting into some liquidity issues, and it becomes, cash flow, right? And then
well, I think if you just look at the supply chain and you think about after all this inflation, what the peddler needs, what the scrap guy needs, we start making some aggressive moves down, we get there pretty quickly.
Yeah, I agree. Well, here we go. The roller coaster is fucking rolling. Here we go. Let's see what, buckle up, put your seatbelt on. Hopefully you got one of those like over your head harness straps that like let your feet dangle, and let's just see what happens. See you guys in April.
Thanks, Brett.
All right, thanks, Jeff.